Welcome to the Future of Finance panel. Today we are here with Bjørn Sibbern, CEO of SIX, and the 4 business unit heads of SIX, Tomas Kindler, Rafael Moral Santiago, Marion Leslie, and Christoph Müller. And we are here to talk about the year 2026 and give an outlook on the year. Last year was characterized by many phases of great market uncertainty. So it's hardly surprising, actually, that almost 100% of our respondents in the annual Future of Finance study said that they are expecting market uncertainty to be a permanent feature. Actually, on the bright side, they say that they are rather seeing it as an opportunity and not a challenge. So let me start that panel by asking each of you, so what makes you optimistic about 2026 in that uncertain times? Bjørn, let's start with you.
Yeah, so first of all, I think actually 2025 is a good benchmark for what we can expect also in 2026. So the uncertainty, the volatility actually created a lot of opportunities for us. Markets on our side were stable. We kept the systems running. We saw significant volatility in April. That had nice impact on our trading volume. It has nice impact on our settlement and the post-trade business. And I would also predict that we will see uncertainty, volatility impacting our business in 2026. With that said, I do not think and I do not hope that volatility will be so significant that it will impact IPOs. We have a healthy, strong IPO pipeline both in Switzerland and Spain. What I also see is that in uncertain time, the use of data, Marion's business will continue to be high. So overall, I belong to the camp where I see uncertainty and what we saw in 25 as a positive for what we will see in 26.
So you are camp opportunity as well?
For sure.
Okay. Thomas, what is your take?
There are a number of elements that make me optimistic for 2026, but let's focus on the market sentiment. When we look at our recent Future of Finance study, almost 70% of the executives responded that they expect improving market environment over the next 12 months. And that's a rebound to previous confidence levels and significantly higher than the response in 2024. And to give you one example from the market, when we look at the indices, both SMI in Switzerland and IBEX 35 in Spain are at record levels. We have seen a huge rally in 2025. IBEX 35 increased by almost 50%. That's amazing. And they continue to rise in the first couple of days of 2026. So that's a good indicator.
And Rafael, what's your take?
Clearly camp opportunity as well. On the one hand side, you see real opportunities being opened up by key dynamics based on technology, client dynamics, regulatory dynamics, which are moving and thereby clearly allowing market participants who are prepared to step into this and explore avenues of growth. And on the other hand, we as SIX in general, and certainly in Securities Services, are well positioned, I think, to capitalize on that because we're entering the year with a refreshed strategy, with a new organizational design, and a very strong team. So clearly camp opportunity.
Okay. And what makes you optimistic, Marion?
So I think it's all about expecting the unexpected, and it's not about what happens, it's how you respond and the decisions you make. And we're clearly in an information, digitally enabled age, and our ability collectively to access, process and use information is like never before. So I think we're as well placed as we could be.
Christoph?
I take that up with well placed. So the payment market will stay very dynamic in 26 as well. So in an environment like this, it is important to stay close to the customer and being able to kind of react very quickly. We SIX are very well prepared for that. So therefore, I truly believe that will be a successful and good year for us.
Thank you very much. So Bjørn, market fragmentation, international competition in capital markets have been talked about a lot. I assume that will go on. So how would you describe the market in Europe and what role can SIX play in that market?
So first of all, we at SIX, we are a big believer in competition. We support the idea of competition, and competition has increased. competition has increased around listings, the way you trade, even on the post-trade side. Marion's business is exposed to competition every day in terms of the data feeds that we provide. So competition is here to stay and has actually increased during last year, and we embrace that. One of the acquisitions we did last year, we did 4 acquisitions. One of them was Aquis, the MTF out of London. A big part of that acquisition was to acquire an MTF in London that could compete pan-European, by the way, even competing with ourselves on trading flow in Switzerland and Spain. So I think actually I will also see a very active year in 2026 when it comes to competition, not only on the trading side, not only on the listing side, but also on post-trade side. We see increased competition there. We embrace it. We believe in interoperability on the post-trade side, by the way, as well. So our job in a fragmented world and in a world with competition is that we secure that the value proposition we have towards our customers are strong. We stay close to our customers. We take up the competition, and we work closely with our customers to find solutions so we make their life easier in a more fragmented world.
And also going more maybe for European solutions, pan-European solutions.
Where we have the right to win, we will try to grow into Europe. As I mentioned, Aquis is a good example of where we can win, but I think also on the custody side we have great opportunities to grow and expand our business in Europe. So Europe will be our focus area, not across everything, but in targeted areas like funds, like RegTech. So Europe will be front and center when we look at our opportunities to expand.
Coming maybe back to market fragmentation, consolidation, Thomas. So where do you see the necessity and advantages of consolidation in the trading venues?
Yeah. So to start with, market structure to a large extent is a function of regulation. And when we look back in Europe for the last 20 plus years, I think regulation has focused on stimulating competition and thus driving fragmentation. And only recently the focus has shifted to we need one big consolidated deep market with a lot of liquidity that can compete with the US market. And the resulting fragmentation is in 2 dimensions. One is across the markets, but to a much larger extent, it's intra-market fragmentation between primary exchanges, MTFs on the on-exchange side, but more and more also OTC with systemic internalizers and bilateral trading. And Bjørn mentioned the acquisition of Aquis that we closed mid last year, and that gives us 3 opportunities. The first one is we play offense on a pan-European scale level, covering 16 markets. Secondly, we can address the intra-market fragmentation in Spain and Switzerland. As Bjørn said, we're still competing between the primary exchanges and Aquis, but we have more tools now in our toolkit to make sure, in terms of functionality, in terms of pricing, that we can keep the flow in our environment and not lose it to, in particular, to OTC. And the third element is technology. Aquis comes with its own zero legacy matching engine called Equinox. And we're going to use that as the basis for our consolidated trading platform, delivering a very efficient solution for our clients across all markets, one plug across multiple markets, delivering scale efficiencies. And these are things how we're going to address fragmentation and will improve the markets we're active in for our clients.
Rafael, I think integration is also like a very known word for you. So I think we just recently announced the merger of the Swiss and Spanish clearing platform. So we're coming back to consolidation. Where are you expecting in the post-trade market and a consolidation in 2026?
Yeah, I mean, maybe let me start with the current market reality. Was similar to what Thomas said. Europe is really characterized by very high levels of fragmentation from an FMI landscape point of view. And this has implications on inefficiency levels, complexity levels, the fragmentation of liquidity pools, all of which is driving costs, but also operational risk. And combination of all of this calls for significant reshaping of our European post-trade landscape, frankly, which is therefore not surprisingly a trend we see with regulators, with the industry at large, with clients in terms of pushing for material change, and particularly also in the context of the Savings and Investment Union, the SIU, which is obviously solving for a reduction of fragmentation and towards developing a European financial system that is much more integrated, much more harmonized. And I think against that background, we as SIX are very well, arguably uniquely positioned, in line with what Bjørn was mentioning earlier, given our positioning as the only provider across the region with a solid footprint in the UK, in Switzerland, across the EU, where we combine pan-European trading with the only EU-based interoperable and multi-asset CCP, multiple CSDs, access to a global network from a settlement point of view, established DLT capabilities, all integrated into our core infrastructure. And I think this proposition overall, in terms of providing integration, interoperability, user choice across the whole value chain from a post-trade point of view, but including also the trading side, is unique. It delivers value to our clients in terms of reduced complexity, higher efficiency levels, better market access, and other benefits too.
Thank you very much, Rafael, for that great overview. So, and thanks again also for mentioning the EU Savings and Investment Unit. So, let me come to you, Marion. So, when I think of policies, regulation, there can also be a driver for business. So, thinking about volatility, more regulation, that calls for more data, right, in a timely and accurate way.
Absolutely. So when things are uncertain, the last thing you need to worry about is the information that you're getting, and it needs to be as reliable as your water supply or the electricity. You just need to not think about it. It needs to be there when you turn it on, and you need to know that it's accurate and reliable. But also when we have times, as we have now, of such geopolitical uncertainty, those are reflected in the regulations that we have and the degree of fragmentation around that. So if we take sanctions, for example, since the Ukraine invasion, in the first year there was a 300% increase in sanctioned securities. And then since the beginning of that, there's a 900% increase. So there are 30,000 funds which have sanctioned securities somewhere in them. That's 15% of the entire fund and ETF universe. So our role is really helping our customers to understand, well, which ones are sanctioned, by which authority, and why. So providing all that background and lineage behind those decisions and allowing our customers to then make decisions with confidence on behalf of their clients about what can they be invested in and what not. And so that to me is a very real example of how you enable clients to operate in an environment of complete complexity, uncertainty, ever-changing, and dynamism.
Let me come to that or build on that a little bit. So when asked about the biggest data challenge in the Future of Finance study, actually, clients said when there was the tariff-induced market volatility, they faced at least one data issue, and I think consistency being the top of them. So how can we provide better data, more accurate data, reliable data? And let me open a new topic here, maybe also on how can AI actually help with that?
So it goes back to the fundamentals. I mean, I've been in data for 30 years and it's exactly the same. The fundamentals are, is the data accurate? Is it timely? Is it complete? So basically, can I rely on this information? Is it present and is it correct? And technology absolutely helps us to do that. AI can help us and has helped us access more data, process it faster, reconcile it, make sure it's accurate, and provide it to our customers much quicker. So, for example, in a corporate action space, we've managed to provide specific data fields 48 hours in advance of previously because of our ability to access and process them quicker. AI enables us to provide data to our customers in different ways. So on the one hand, it really helps us process and access data, but on the other, it helps the customer access and consume that data in a very personalised way. So an example again on the corporate action side is an AI assistant, a bot that allows customers to really target how they want to use that data and where they want to use it. Another example is we have a market abuse solution for our customers targeted at compliance officers, and yes, actually presenting the potential examples of market abuse is one thing, but actually being able to condense and streamline the work that the compliance officer has to do in order to triage those examples. We've managed to reduce that work by 80%. So really making the job of the client much more efficient so they can focus on what really impacts them. But at the end of the day, it's all about how do you make the data available to the client where they want it, when they want it. So changing our delivery channels around APIs, for example, really helps that. And then continuing to invest in those fundamentals. It's the quality and it's the reliability of the service, and continuing to invest in that is the most important.
Christoph, reliability, stability, I think that calls for a payment business. You are the head of banking services, our payment business, and coming also back to AI, I think you are processing millions of transactions every second day. So that calls for a lot of use cases in AI, correct?
Definitely. AI is, of course, a huge topic in our industry as well. The payment industry was always focused very much on efficiency and automation, but so far automation was along a fixed set of rules, and that was also the case in the fraud detection area, for example. But in the fraud detection area, introducing AI now is really changing the game and is increasing the effectivity of the fraud detection, which is, by the way, urgently needed because the fraudsters are using AI as well. So it's a constant race that we are having, and this is also why a collaboration over the whole industry and together with all banks is so important. But besides the fraud AI case, there are also more easy use cases like card blocking by phone. Soon an AI bot will handle all these calls in any language, so this will reduce costs and improve the quality of the service. And these are just two examples of our services, and I'm sure many more will come based on AI.
Thank you for that insights into the fraud case and the card blocking case. So in 2025, we enabled instant payments in Switzerland. So for 2026, what can we expect in any extensions in the platforms and payment?
A lot, of course. But thank you for mentioning instant payment. This is really was a major step for us in Switzerland, introducing this technology. And this technology will also simplify payments further on in Switzerland and for Switzerland. When it comes to our payment platforms, the strategy is pretty clear. We want to be the processor of choice for every relevant payment method in Switzerland. And as soon as we are the processor, we want to grow along the value chain by introducing additional services to the banks at higher efficiency, at lower cost, at higher quality than any other provider, and then also their own solutions they have. So this is the strategy on the existing payment methods, and we are well established there, but we have more potential to grow. Besides the existing payment methods, we focus on 3 development areas. So one is we want to enter the credit card market. It's a big market and we have everything to be able to succeed. Then the second topic is multi-rail fraud prevention, a very complicated word. But it is in the end easy. It's just about introducing holistic fraud detection services across all payment methods. And the third one is, of course, we do not want to miss any new payment instruments. So we are closely follow the developments along stablecoins and crypto payments. And we align with the banks that we are sure that we do not miss anything on this side.
So stablecoins is a topic in payments, but it's also a topic in security services. So How can actually stable coins, digital assets, how can they be mapped along the value chain, and maybe particularly in settlement and custody, Rafael?
The adoption of digital assets, DLT in general, and certainly stable coins, but also tokenization in particular, are accelerating quite a lot globally, fueled by regulation, but also increased institutional client demand, and promising very significant benefits in terms of better collateral mobility, processing efficiency, liquidity, etc. Also laying the foundation for important topics such as 24/7 market infrastructure, and specifically around stable coins. Also the market to a large extent expects them to become the leading form of tokenized assets going forward, which would have very significant implications, and we do see early signs of this trend materializing. So lots going on, lots of opportunities, certainly. I think as SIX, we are very well positioned against that background, building on our history of DLT leadership, but also building on the recently refreshed strategy for the digital asset space, where we are effectively looking at 4 key pillars, if you will. One is really integrating the digital with the traditional world. We're integrating our digital CSD capabilities with our traditional infrastructure, post-trade infrastructure capabilities. Secondly, really supporting our clients on their journey from traditional to digital, in terms of providing a kind of one plug, two worlds type of solution across digital and traditional asset classes. Thirdly, looking into exploring avenues to support our clients on their quest to capitalize on opportunities with stablecoins and also crypto assets, particularly around custody and custody-related services for those pieces. And last but not least, being a steady, reliable strategic partner to the SMB on topics such as wholesale CBDCs and related opportunities, and to live up to our responsibility in terms of contributing to the Swiss Financial Center.
Thank you very much, Rafael. So you mentioned also liquidity, and when we see illiquidity, Bjørn, on a higher level, there's always the question about the relationship of private and public markets. So how do you see these two markets coming, not together, but how do you see the relationship between these two markets?
Yeah, so I think actually the interaction between private market and public markets works very well. Of course, our job is to make sure that our value proposition in terms of the public market is strong, and we continue to do whatever we can to make sure that works well. With that said, from a media point of view, media loves to try to create tension between private market and public markets, but I actually see it's a very good interaction. Let's not forget the second largest IPO we had in 2024 was Galderma, owned by private equity, came to us, listed with us. It's just an example of how we work. What is important for me is that a company needs to decide on what is the right ownership structure for their journey. Sometimes public market is the best way forward, private market at a certain time might be the right way forward. What I think actually, and that's a part of what our storytelling, what we can do better, not only us but other exchanges as well, is the benefits of being a listed company, right? In a global world where people, investors, but also consumers want to know more about companies, a listed company is transparent. There's a lot of information around a listed company. It helps you in terms of branding and visibility. You have a price every day for employees if you have equity programs. And in a time where, if you look at the European level, where the Draghi report talks about stepping up in terms of activating retail investors even more in investing in equities, I think actually we have a great opportunity in front of us. And a good example is also if we look at Spain, where we had around 20 SME listings last year and the year before. So companies that have been privately held going public, and you see retail investing in some of those companies is an important part of the journey.
And you mentioned the SME listings, and we have a very successful market, for example, in Spain with the BME Growth and BME Scale Up. So, Thomas, how do you see the development of that SME listing segment? Because, right, we want to bring more companies to the market and to being listed.
We have seen a very stable environment. We had 26 listings across Spain, UK and Switzerland in 2024. We had the same number in 2025. And we want to double down on that. We are the only exchange group in Europe with Aquis having listing and trading venues in all 3 major jurisdictions, in the EU, in the UK and in Switzerland. And we want to build a pan-European solution for SME companies to raise capital, but also to have the investor visibility not only on a local level, but on a pan-European level.
Mm-hmm. That was quite a tour de horizon for that panel, so thank you very much. Maybe let's wrap up that panel with each of you saying one sentence, including the word 2026, or the numbers 2026 and the word 6. So now we start with you, Christoph.
Okay, in 2026, SIX will stay close to the customers and will provide secure and reliable payments for Switzerland.
Thank you. Marion?
I present to you in 2026 the 6 data cake, 3 layers, 6 ingredients. At the bottom, quality and service, foundational. Data, insights and access to expertise in the middle. And at the top, regulatory ready and technically enabled content.
Wow, what a sweet surprise in 2026, right? So, Rafael.
In 2026, SIX will make a major step towards realizing its vision, its 2030 vision of becoming a pan-European provider of digital and integrated post-trade solutions.
Thank you very much. And Thomas?
SIX will start the member test for the new consolidated trading platform for equities in 2026.
So, Bjørn, what's your sentence for 2026?
SIX will be the financial heartbeat, and we will grow together with our customers in a year that will be very positive across the industry.
Thank you very much to the panel, and thank you for watching.